Okay, welcome to a little mini lecture on a very handy tool for your accountant's toolbox. And regardless of whether you become an accountant or not, you're going to find this to be an extremely valuable tool. It's the accounting roll forward. You've actually learned this, an example of this in Chapter 2 when you worked on the statement of retained earnings. And we're going to relate that example to this standardized tool. But you'll use this throughout your academic career. And regardless or not if you become an accountant or not, I promise you that this is something that you'll take away from this class and you'll be able to use for the rest of your life. This is the format of the roll forward. Very, very simple. And think of this in terms of when we did our statement of retained earnings. You start with your beginning balance here. Here's your ending balance. This works for dollars or units. Doesn't matter. But in this case, we're going to start with the beginning balance of $10,000. Have additions of $20,000. That gives us a subtotal of $30,000. There's $14,000 remaining, so $16,000 went out somehow. Let's look at this in the case of a statement of retained earnings. If this were the beginning retained earnings, $10,000, we added to that net income. You wouldn't have to do this subtotal on the statement of retained earnings, but it's, in any case, it's here. On the statement of retained earnings, recall we subtract out dividends, and that would have given us an ending retained earnings of $14,000. This works for inventory, prepaids, unearned revenue. Just you'll use this over and over again. I'm presenting this in Chapter 4 of my free accounting textbook as demonstrating a handy way to calculate expenses for the matching principle and proper revenue recognition. So we record our revenues, expenses in the correct period. So use this toolbox along with that accounting textbook, and I think this will be very handy for you. One of the things that's important in the real world is that this accounting roll forward only works if you've got good information. If your beginning balance is solid and you have all of the additions, and you can go count the ending balance, and that's a good solid number. This works really well in inventory because in inventory you can calculate a physical inventory and go and see how many units are actually left. If your beginning balance is bad, you don't collect all of your transactions, then this really doesn't work very well. You may use this in manufacturing schedules, sales schedules, payroll schedules, things like that. But the good news is in academia, you're going to be faced with a lot of problems, a lot of multiple choice, multiple guess questions, and generally in those you can kind of count on the data being good. In academia, we also like to make you do a little bit of algebra. Perhaps we could give you the ending balance, make you force back and tell us what the subtractions were, what the cost of goods sold is if you're looking at inventory, for example. So if you use this format every single time, you're going to have consistent results, and you'll be able to do your work in a consistent manner regardless of what topic that you're covering. So good luck, study hard, and hope you get an A in Accounting 1.